Good day, everyone. My name is Stephen Stewart. Very pleased to be here to talk to you about Orefinders 2.0. It's something completely new, but it's something that we've been working on for the last little while. It's called an upgrade to Orefinders. We are going to be upgrading our listing on the venture from solely an exploration company to a hybrid investment and exploration company. It just gives us more flexibility and optionality. I emphasize nothing is going to change with respect to our exploration strategy and our portfolio. We will remain an exploration company, and that's why people invest in us. I think that's why I invest in the juniors, for that huge optionality, the 10 bagger, the potential 100 bagger when you do find that elephant. Orefinders will continue along that course, but it's going to layer on some corporate flexibility and optionality by becoming or adding an investment aspect to the company, which is something we've largely done all along, but this formalizes it and allows us to operate more simply and more streamlined within the purview of the exchange, etc. So here's our forward-looking statement. And again, I'm just going to emphasize nothing is changing with respect to Orefinders and how it has operated. We are an exploration company. We're focused on gold and copper and zinc as well. We're mostly in the bulk of our portfolio is in the Kirkland Lake camp, where we have that $60 million 10-year deal with Agnico Eagle. We're just about to enter into the third year, and they are 9.9 shareholders on top of that $60 million joint venture. Of course, we've earned through a creative transaction, we earned 20% interest into the NAC gold porphyry discovery out in British Columbia that American Eagle owns and operates. Is very exciting, tremendous discovery in our opinion, but it's early days and there's work to be done. We've got another grassroots generative project. We're chasing a big zinc deposit. Obviously, we haven't found it yet, but the idea is we generated an idea and we're going to test it this year. And we've got some drill results pending on Grizzly out in Quebec. And then, of course, as anybody who follows Orefinders knows, we've got this 25 million shares of Mustango, which we earned through our activism, which I'll talk about in a bit. QC Copper was spun off from Orefinders. Shareholders got a dividend, 5 million shares of QC Copper dividend directly to shareholders. And then, of course, Orefinders retained the over 5 million shares of QC Copper to this day on our balance sheets. And then we rinsed and repeated the same model with American Eagle when we spun it off. Again, we issued a dividend and kept 5 million shares for our balance sheet. We're long-term holders of both those projects because we think they're great projects, and there's tremendous upside there, especially relative to the down market. So I think those equity positions really speak to what we're trying to do with Orefinders 2.0, but it's going to be more than that. It's not just going to be about spinoffs, but certainly spinoffs are a part of it. Again, we're upgrading our listing status to what's called a hybrid, and a hybrid includes both exploration and investment. And this just allows us, me and our board, to corporately transact easier and more formally. This will allow us to invest in seed round investments. So all retail investors should be interested in, call it the seed round, cheap round shares. We see a lot of deal flow. Not only will we incubate additional Ore Group companies. I suspect there will be a seventh and eighth and more Ore Group companies as things evolve down the road. This will give Orefinders the opportunity to participate in those cheap rounds. Outside of that, there'll be completely arm's length opportunities. I get a ton of deal flow. I have a very deep network, and I see a lot of opportunities. Personally, I invest in a lot of seed round financings, and I think this also gives Orefinders the opportunity to do that in select opportunities. We'll also be looking to build positions in strategic and undervalued companies. And what do I mean by that? So strategic meaning districts that we want to consolidate, but maybe we can't for one reason or another. Usually when I say we can't, that's usually a management, opposing counterparty management issues. And so we'd look to build toehold positions that we think we love the assets, and we see a disconnect between price and value. And I assure you there's substantial disconnect between price and value. But really, it's not about being a fund per se, but it's about building strategic positions so that we can consolidate and perhaps do a little bit of activism, which is something we did successfully with Mustango. Activism is about building a toehold position and forcing some change. I do believe that this industry needs to consolidate both on the district and property level, but also at the company level. There's too many management teams out there, and oftentimes a management team can stand in the way. So influencing small changes can often create big value. in this industry. And that's something that I believe in. And I also believe there's an opportunity to create a lot of money there. So while that's not going to be the core position, we're not looking to evolve into the Carl Icahn of the junior mining industry. I do believe that there's opportunities to buy strategic positions in undervalued companies and make some change, because change is often good in this industry. Why do we want to do it? Well, ultimately, it's really the essence is this: there are a lot of ways to make money in this industry. Again, I emphasize people invest in us not for a 10% return. They're coming for 10, 20, 100 times. They want to make that big Great Bear score, the big discovery, Voisey's Bay. That's why people invest in this high risk industry. And Orefinders is always going to have that layered into it, because we love the drill bit. We've been drilling aggressively, and we're looking for the big score. That's ultimately what we want and what Orefinders represents. But this, call it Orefinders 2.0 strategy, is going to allow us to finance it more creatively, as opposed to just drill, press release, raise money, rinse and repeat, which 95% of the juniors do, which is fine. But that model is highly rigid and risky. This gives us flexibility, optionality, diversifies our portfolio, gives us liquidity events. This really just makes us more sophisticated, more dynamic. And I think our team, the Orr Group and myself, have really demonstrated the ability to A, work hard, and B, do smart deals and be creative. I think, that's what I love about deal making is that there are no limitations outside of the law and the exchange rules. Anything goes. And so it's just about looking for the opportunity, being persistent, finding the right deals, and moving forward. Don't stop moving forward. So as I said, we've got a track record of creative deals, creative financings, internal and external, raising a lot of money. We raised a tremendous amount of money. All of our companies are well financed, and we've done a good job in incubation, and then drilling these projects out. Timing is everything. I think that's, I think we do this at any point in time, but I think right now is very opportune. This market is really bad. I can just emphasize that the Orr Group companies, their share prices are down, and we're not alone. And so that was the opportunity, not necessarily to be overly aggressive on the drill. I mean, if you're not getting paid for your drill results, stop drilling. In essence, is not a bad position to take. But then you look at other opportunities. You look at deal. You look at the corporate opportunities that are cheap, consolidation, the disconnect between price and value. And so this is going to allow us to take advantage of the situation. And it's a unique approach. Very few companies, I can't really think of one, maybe two other companies that do this sort of thing, but it definitely sets Orefinders apart in terms of its approach to allow us to lower our cost of capital. That's what it's all about. And limiting our dilution so we can put as much meters into the ground as possible so that we can hit that big score one day. That's the objective. I emphasize, anybody who doesn't know us, take a look at the Orr Group of companies. We've got 6 companies here: Metal Energy, Baseload, Stango, American Eagle, QC Copper, and of course, Orefinders. All of them have had their day. All of them are suffering to one degree or another, but they all have excellent assets. They're well capitalized. And if I do say so, they're managed quite well. We treat our capital like it's our own, and we've got good people. I emphasize good people and good projects. And so I think there's value baked into all of these. There are other companies outside of the Orr Group that are also good companies with good assets that may not have capital available to them, that we could take advantage of and acquire them cheap. I say, there's a tremendous opportunity in this market right now. If you have capital, liquidity, you're not forced to sell, and you can be patient. And that's what I want Orefinders to evolve into. And Orefinders 2.0 is a major step in doing that. So I am excited. It's going to be an interesting 2023. I think there's opportunity in a good market. And there's also opportunity in a down market, and we'll see what tomorrow brings. But either way, we'll make the best of it. So if anybody has any questions, my name is Stephen Stewart. My contacts are there. I always love hearing from shareholders and prospective shareholders. So give me a call. Thank you.